Your take, Catherine, on what we heard from the PBOC just this morning. What's the overall initial reaction?
So it's not too unexpected. And just like we've seen over the past couple of years, when we look at drivers of the market, it continues to be the flattening of the COVID curve, economic recovery, the pace of an economic recovery, and very importantly, policy response. So the PBOC really has started the new year in a different position to, let's say, other global banks. And we do expect to see further easing or supportive measures, both monetary-wise as well as from a fiscal sense as well.
Okay, is this it though? I mean, last week, Hong Kong stocks, if I'm getting my statistics correctly here, had the best week in something like 14 months. So to a large extent, most other sectors, ex-property, for example, have started to just come off the bottom as far as, I guess, price and obviously as a function of valuations here. Do you think we've seen it? Is this it that turns the ship around finally?
Well, I think it's a recognition that the inflection point of hawkish policy really was in the third quarter of last year. But it's not going to be all out easing. It's going to be very targeted. And the key is always when it comes to policy and responses in China is that of stability. And really interestingly, when we look at the market last year, a lot of those value names were outperforming, but it was merely because a lot of those well-loved growth names were underperforming. So this year we do expect those value names from an absolute perspective to start doing better. So, again, what's key for us in terms of this market environment is really being diversified, being cognizant also of any downward revision earnings when it comes to earnings. Especially when you see MSCI China at 40%, you're probably going to see some negative surprises coming through. So that earnings certainty in this market really is key.
Yeah, and I think people are focusing a lot on this whole value rotation now. You're seeing some of that in Asia. I'm just wondering, does it disrupt the tech rebound, especially that now some of these Chinese mega cap tech plays are actually deep value plays?
It does. And, interesting, it's a bit of a barbell approach because not only do we have an exposure to those sort of unloved, old economy, value type of sectors and stocks, but also the small space, or many names within small caps, whether it's tech or consumer related, are looking very attractive too. So I don't think that necessarily speaking, we're never going to hear any further news flow regulatory wise. You are going to continue to hear this, but it's really filling in the gaps from the big sort of announcements we had regulatory wise last year. So common prosperity is still going to be key. And in terms of this policy environment, the macro has weakened, hence why you're going to get more of these stability or supportive measures being introduced into the economy.
Catherine, it took one weekend for us to go from maybe they're going to hike in March to maybe they will hike by 50 basis points. I'm talking about the Fed here. How does that affect, if any, your approach or allocation to risk assets?
Interestingly, even last year, one of the key risks we felt looking at the Asian markets was the potential correction of the market in developed markets. And so once we started seeing that policy shift, what happens to all that free money that households were getting? And with inflation, that's global inflation at rates that we are seeing, are consumers willing to spend or pay X amount for a product if they're not seeing that sort of transfer of cash from the government balance sheet to the household balance sheet that's being taken away? So definitely it's a key risk. And this is why also from a Chinese perspective, when we look at the correlation between the mainland stock market and the S&P 500, it's incredibly low. And it's almost like China's been there, done that, and now they're starting a new cycle. So it's, obviously in a very different positioning or scenario than what we're seeing. So if you could take anything away from this year, the biggest risk really is still relating to policy response or policy mishap from a global perspective.